17, and they asked them to prepare consolidated revenue fund account, development fund account, statement of assets and liability, and state the component now. We need to have idea of what IPSA-1 is all about. Are we together? Hello?
Yes.
Yes, sir.
Yes. We need to answer this question. We also need to have idea of what IPSA-1 is all about. Let me explain the IPSA-1. I will send you the note after the class. Is that clear? Please listen attentively. IPSA-1. What is IPSA? IPSA simply means International Public Sector Accounting Standard. These happen to be the accounting standard to be adopted for the recognition of revenue, expenditure, and other financial transactions in the public sector. How they are meant to be treated as accounting line is concerned. Now, looking at this, there are different approaches to this. Before the adoption of what IPSA, prior to this particular period of IPSAs, public sector accounting is being prepared on a cash basis. And preparing financial accounting in the public sector on a cash basis simply means that you are meant to prepare your statement of financial position in line with liquid assets. What do we mean by liquid asset? Those assets can be quickly turned into cash. Where we talk of cash and cash equivalent, that's the first thing. After that cash and cash equivalent, what make up cash and cash equivalent? We are talking of cash balances and bank balances. After that, we talk of receivables. After receivables, we talk of what we call prepayment or advances. After those ones, we talk of investment. After investment, we can talk of other assets. Other assets in this sense are referred to as non-current assets. Now, in early 20, they look into the matter and say that there should be an approach of taking into consideration what we call modified cash basis, where they are also meant to recognize all those items that are also receivable in nature in the public sector. That scenario, they bring on board what they call International Accounting Standard. That International Accounting Standard helps the public sector to have the recognition for receivable, in which they try to adopt what we call accurate basis. They try to adopt accurate basis in preparing financial statements. Adoption of accurate basis in preparing financial statement simply means that you are meant to prepare statement of financial position in line with accurate basis. And preparing financial statement in line with accurate basis simply means that statement of financial position is meant to be prepared by starting that particular statement with non-current assets. Non-current assets, because accurate basis make provision for depreciation and also make provision for bad debt. Simply means you are meant to recognize all your credit transactions. In that scenario, International Public Sector Accounting Standard 1 is all about how you are meant to prepare statement of financial report or financial report or statement of financial statement rather, the process of preparing and presentation of financial statement. The process of preparing and presentation of financial statement. now, or financial report in the public sector. What are the components in this so-called IPSA 1, the component of financial statement? The component of financial statement are one. The first thing is what? Statement of comprehensive income. Statement of comprehensive income. This statement of comprehensive income is in line with statement of consolidated revenue or income and expenditure. They can call it in the public sector statement of income and expenditure. They can also call it statement of consolidated revenue. That statement of consolidated revenue is meant to be prepared by the federal and the state government, while local government is taking it as what? Income and expenditure statement, which is the same thing as what? Statement of comprehensive income. That is the statement that shows the related income and also related what? Expenditure, in order to determine the surplus or deficit. And that is the purpose of statement of consolidated revenue or statement at the state level and at the federal level. While at the local government level, the same statement that is meant to be prepared is also called a statement of income and expenditure. Purpose of that particular statement is to ascertain deficit or surplus. Aside that, after preparing what? Statement of comprehensive income, which is what? Consolidated revenue, statement of consolidated revenue or statement of income and expenditure, we are also meant to prepare another statement called statement of financial position. Statement of financial position. This statement is local government level or at the federal level. They are meant to prepare statement of financial position. Aside that statement, you are also meant to prepare cash flow statement, statement of cash flow, which is meant to what? To tell us what is the revenue inflow and what is the expenditure inflows look like. It's a statement of you determining the inflow and outflow in terms of the receipt and payment in the public sector. It's a topic on its own, in line with what? IPSA 2. When we get there, we also discuss it. Aside the three statements I've made mention of, you are also meant to prepare this statement of net assets, statement of net assets, statement of net assets. That is the statement that is meant to be prepared in order to know the available fund balances, in terms of the available fund balance under the consolidated revenue fund, under the development fund account, under the contingency fund account, under the appeal fund account, and other related funds set aside by the government. That is the purpose of statement of net assets, or we call it a statement of change in fund. Aside that, we also meant to prepare notes to the account. Statement of what? Notes to the account. The note to the account is meant to be prepared in order to determine the figure that will be reported in the financial statement. The figure to be reported in the financial statement. That is when that helps us to determine those figures that are meant to appear in your income and expenditure or in your consolidated revenue fund. At the same time, the one that is meant to be reported in your statement of financial position and cash flow statement. You are meant to get all this from your notes to the account. Another statement that is also required by the IPSAs is statement of accounting policy. Statement of accounting policy. The statement of accounting policy is meant to give us the estimated figure, the correction of error, and the necessary adjustment that are meant to be adopted in line with accounting policy of the organization. The accounting policy in terms of what? Depreciation method, the accounting policy in terms of professional method, litigation aspect. All these are meant meant to appear in the statement of accounting policy, telling us the information to be disclosed and the one that are not meant to be disclosed as statement of accounting policy is concerned. This is the summary of what we call IPSA 1. If you now look at the question they now ask in the question, which way I'm going now, are you all with me? Hello?
Sir, which question is that? Which
Please, I
question?
don't know if I'm just the one. I can't see anything. Or are we just listening to your voice? Can't see anything.
Did you understand what I've explained? Hello? What I've explained so far is what we call IPSA 1. Are you with me? I've explained IPSA 1 to you. Then I'm going to the question part that warrants me to explain that IPSA 1 to you. I will send the note to you after the class. Because there's no way I will answer that question that you will not see what I'm referring to. Now, let's go to the question part. The question came out in 2017. Are you with me? Compulsory part, 30 marks.
Excuse me, sir, please, can I say something? I don't know whether it's just me. I can't see anything.
I said I only explain what IPSA 1 is. I've not sent anything to you on IPSA 1 in order for me to solve that question. You will see the question now.
Okay.
Can you see the question now? Can you see the question?
Yes,
sir.
Okay. If we can all see the question, it is A part, section A, question number 1. It is compulsory, 30 marks. The following balances were extracted from the book of Calabar State Government of Oton as at 31st December 2015. They are in millions. Debit, credit, this is the trial balance. We have the cash balance, we have the cash accounts, we have consolidated revenue fund as at January 1, 2015. Allocation from the federation account, other revenue. We also have personnel costs. We have ordinary share of ₦1 each in Akon PLC. We also have deposits. We have advances. We have loan from federal government, loan to local government, fixed deposit of Loba Bank PLC. Now, additional notes, additional information, 40 billion should be transferred to development fund account for capital projects to be embarked on or we embark upon in first quarter of 2016. B, other charges approved by the fund management committee and paid during the year, but which were omitted from the books amounted to 50 billion. Total grant of 100 billion collected from the federal government for capital projects to embark upon in the first quarter of 2016 was not recorded anywhere in the book. Required. Prepare the following statement. Prepare the following statement for submission for Auditor General for the state. A, consolidated revenue fund account for the period ended 31st December 2015, 8 marks. B, development fund account for the period ended December 31st, 2015, 3 marks. Abi, making how many marks, please? Making how many marks? 11 marks. If you are not answering me, I will answer myself. Statement of assets and liability as at 31st. As at December 31st, 2015, 9 marks. Making how many? 20 marks. C of the question, state the components of general purpose financial statement, a typical federal or state government. 4 marks. Now says state 4 principal users of government financial reports and their needs. 6 marks. That is total of what? 30 marks. How will you answer this question? It's different from the one we have done before. Now, looking at it from what we are looking at, what is your position? Can you solve the question? Hello, we don't want to wait the whole day on this. Please talk. Can you solve the question?
Please, let's solve it.
We should solve it.
Yes, sir.
Who is this Abiodun that is sending the question to the platform? Who is Abiodun? Abiodun, who is the Abiodun? Abiodun is not ready to. Okay, oh, if you are not ready to talk, I will keep quiet. Okay. Let's go to the first question now. First question. First question. May 2017. Okay. That will be the last question I'm going to solve on this part to move to the next topic. Okay. Now, let's not look at it from another angle. Looking at it from that question, what is the first question they ask you to prepare? Who is this person talking? Okay. What's the name of the organization, please? Maybe someone has sent the question to the platform. You can look at it and talk to me.
State government.
We don't have time.
Calabar State, abi? Calabar State Government of Oton.
Calabar State government, abi?
Yes, sir. Yes, sir. Yes, sir.
Okay. A part of the question say we should do what?
Consolidated Revenue Fund account for the period ended December 31st, 2015.
Statement of consolidated revenue for the period ended ended 31st December 20 what?
2015.
2015. Okay. Now that is the question. Okay. Now let's go. Now let's go, please. Now, from the considered revenue fund, from the question you are having, how are you meant to go with the question? Since you have the question with you, can you give me the question one after the other? I have the revenue side. This is the revenue side. What are the revenue that are meant to come to consider revenue fund account from the question?
The balance brought forward. Hello,
is it
sir.
in million or in the figure? Is it in million or in thousand?
In millions.
Okay. Now, you can try to use the balance. You can decide not to use it. It's allowed. Because when you look at Quasi Revenue Fund account, is an account prepared in order to determine the surplus or deficit. If you don't put the balance at the beginning, do you understand? Then your closing balance, you are going to refer it as what? Surplus, which will be added to the opening balance to get the new closing balance. And if you have added it at the beginning, you will not take it as what? Surplus. You will take it as what? Closing balance. Is of two ways. Okay, as I'm talking to you, now let's pick it one after the other. What are the likely revenue? Leave the balance alone. I will tell you how to treat the balance for now. Let's go with the revenue that are meant to appear. Hello?
Hi.
What are the revenue to appear here? Since I don't want to go with the opening balance in the question.
Transfer from Federation account.
Transfer from Federation account. That is allocation from Federation account. Allocation
Yes, sir.
from Federation. Now give me the figure for the allocation of Federation account.
40 billion.
40. Okay, what's the second transaction that are meant to also appear here?
Is it 40 or 300?
It's 300. It's 300.
300,000
million.
Okay. Oh, so sorry.
Allocation from the Federation account, that is 300,000. 300,000. Okay. After that, what do we also have? We also have other revenues. Is that clear? Other revenue. How much is the other revenue?
40.
40,000. Okay. Then the next one. What are the other likely revenue that are also meant to appear here in this account?
Deposits.
Deposit will not appear there.
Okay.
Advances will not appear there.
That's
Now, what is it?
I said that's all for revenue.
Okay. Now look at it from the second part of the words, additional notes. You were told that certain amount is meant to be transferred to the Fed Development Fund account, which is 40 billion. Now, since we move towards 6 zeros, from that place. Then we also have other charges that are also meant to appear there. Then we also have a grant that we also meant to work with. Now, what are we meant to do with all this? Now, you are meant to create a note beside what you are doing. Our note will be here. We can have what? A look of what we are working note. Our working note will be here. Working note. What will be our working note 1? Now, if you look at that working note, we don't need to work on, they said 40 billion to be transferred to the development fund account. Other charges approved by the fund management committee and paid during the year, but which were omitted from the book, amounted to 50 billion. Now, this one is completely omitted. It has not been recognized in the book at all. Do you understand? That one will also what? You are meant to open what? Cash book, that cash account. Let's open our cash account. Our cash account. All of you, I think you have a better understanding of double entry principle. Is that not so? Now let's do it this way to make it more reasonable, not to waste our time. I can do it this way. I have a debit, not to waste our time. That's why I'm doing it this way. Then I have a balance here. Okay, let's go, please. Now, what is the opening balance of your cash?
60,000.
60,000. That will have a debit balance. Aside that opening balance, what else again do you also need to look at? Hello?
Aye.
Other charges will also pass through this system simply because you are told that it's been omitted. Is that clear? Were omitted from the books. It doesn't appear. And charges, the payment are meant to pass through the bank. Then you also meant to open. How do you prepare it? What do you call it? Other charges. How much is the other charges? That one is going out of the account. How much is it?
50,000.
50,000. Okay. Now, aside that, please follow up with what I'm doing. We also have total grant of 100 billion collected from the federal government for capital project to back upon in the first quarter were not recorded anywhere.
Hello, sir. Sorry, the other charges is 50 billion.
50 billion, Abi? Now,
Yes.
50 billion has already been abbreviated thousands of them. Can you see it?
Okay. Okay.
Now, here we now say we have what we call grant. How much is the grant we received? We received grant of 100 what?
100,000.
Is it 100,000 or 100?
It's 100 billion, but it has already
That will not
been
be how much?
fabricated.
Yes.
100,000.
100,000. Is it clear? Okay. If you look at these two, all these transactions, at this side, what do we have? Now look at the balance here. Plus this minus is because of I'm using a Z. That is what I'm using. I'm doing it this way. Is it clear? I don't know whether you understand what I'm doing. If it is clear, let me know. Is it clear? We have a
Yes,
balance
sir.
of how much? Is it clear? Do
Yes.
you understand
Yes.
it? We have done it.
Yes, clear.
On a good, they are supposed to have a debit side, credit side here, but it's going to waste my time drawing the table. But we've been able to get this clearly then. Now, working note 2. Our working note 2 will now be other charges. Now, looking at what we have here, this is coming from cash book, Abi. That other charges is coming from what? Cash account. Now, it has been credited in the cash book. It's going to be debited here. Are you with me? Then the second phase of this is meant to appear where? Is meant to appear in the consolidated revenue fund. Which is going to be the same amount. At the end of the day, the balance here will be what? Nil. Is it clear? Can you see it? Any question in regards to this? Did you get it? Do you get it?
Yes, sir. Yes, sir.
Now, question number 3 now. Question number 3 now. Now, looking at what we have here, this is coming from cash book, Abi. That other charges is coming from what? Cash account. Now, it has been credited in the cash book. It's going to be debited here. Now, grant account. Where will this one appear? Now, this one also came from cash book, cash account. How much is it? It's been debited there. It's going to be credited in this account. Is it clear?
Yes, sir.
Then it's going to development fund account from this account. Development Any question with the note? Are we clear with the note? Question? Oh,
It's okay, sir.
okay. Now, let's go back to where we are coming from. Now, we are now meant to look at, we have what aspect of the revenue. Let's look at the aspect of expenditure. Expenditure. Now, what are the likely expenditure? We have what we call other charges. Is that also? Other charges based on the working notes. Other charges, working notes. 1. How much is the other charges we have as this is concerned? Other charges is what? 50,000, Abi?
Yes.
Now, what else we also have? As the question is concerned. Look at it, you have personnel cost. Personnel cost. Personnel cost. How much is our personnel cost?
150,000.
We have entered that. What else we also have that is meant to also appear there? Apart from personnel cost, do we also have any other cost?
Advances.
Advances is not going to be there. Okay. What is the total of the debit side? I have 200,000 at the other hand. When we less it from that side, 140,000. This will now appear as what? Surplus. Do we have a better understanding of this one?
Yes, sir.
Yes, sir.
Now, let's look at question number B part of the question. What do you say we should do? B part of the question.
From account.
Statement of
Development
what?
fund.
Development fund account. Now, from this development fund account, do we have any opening balance for development fund account initially in the question? Do we have anything like development fund account in the question? Hello? Hello?
No, sir.
Yes, there's none there.
None. Okay. Now, if we don't have anything there, then we come back to this place and say that, oh, you were told there should be a transfer, Abi. 40,000 should be transferred to development fund account. We didn't work on that. Do you notice that?
Yes, sir.
Yes.
Okay. We need to work on that, please. This will now be transferred to development fund. How much is the money they asked us to transfer? 40,000, Abi?
Yes.
Now, this will not be included in this. The balance will now be 100,000. Is it clear? Then we now come here to development fund account, transfer from CRF. Is that clear? That's considered revenue fund account. Is that clear? Is that clear?
Yes, yes, sir.
Now, this will appear here. 40,000 is coming here. Then we also have a grant. There is a grant we have. Grant. Can you still remember grant? How much is the grant? The total grant is what? 100,000. Is that clear? What else is also meant to appear in the development fund account based on the note given to you? Go and check that your note again. The application of what I gave you in that note is what I'm using here. Now, we also have loan from federal government. It's part of inflow. Okay, let me even indicate because I didn't indicate that for you. Inflow. Now, loan from federal government. How much is the loan from federal government?
60.
60,000, I mean?
Yes.
No, loan from federal government, that's 60,000, okay? 60,000. Okay? Any other thing that is also meant to appear here, we also have loan to local government. That one is going out. That one is outflow. Outflow. Now, loan to local government. How much is the loan to local government?
80,000.
80, Abi?
Yes, sir.
80,000. Okay. Any other thing we also meant to look at? Not at all. Then we are meant to balance the account. Now let's balance the account. The total of this one the balance I'm having here is 120. Is it correct at your own end? Is it correct? Balance carry down. Okay. What's the next statement they ask us to prepare?
Assets and liabilities as at December.
Statement of assets and
Liabilities.
liability. Okay. Now, here we have the asset. The first one, assets. What are the assets in the question?
Cash account.
We have the cash. Cash. How much is our cash balance now, based on our working notes? Working note 1. What is our cash balance in our working note 1?
110.
110, Abi?
Yes, sir.
What approach am I using to prepare this account, please? Which approach am I using?
Statement of profit.
I told you when I was explaining to you that we have what we call accrual basis. When you are starting with accrual basis, you start with what non-current assets. When you are starting with what cash when you are starting with what we call cash basis, you start with what liquid asset. That's why I'm starting with what cash. I'm using what we call cash. What do you call it? Cash basis, and I need to start with liquid asset. Liquid asset is the cash. Is it clear? The next one.
Is it advances?
Now, we also have, apart from that cash, we also have what? Advances. That one is also an asset. Advances. How much is the advances?
80,000.
80,000. What else again? Investment. That is ordinary shares. Ordinary shares of ₦1 each. How much is that?
150.
Eh?
150.
150,000. Any other asset?
Fixed
We
deposit.
also have fixed deposit.
Deposit.
Fixed deposit. How much is the fixed deposit? 60,000.
60.
Any other one again?
No.
You now add everything together. What do we have? 400,000. Can you see it? This is the total asset. Total asset. Now, liability. We call it liability. Under that liability, we have what we called, under the liability, what do we have? We have funds and reserves. Funds and reserves. Now, under the fund, what do we have? We have consolidated fund. You are given a consolidated fund balance, Abi. What is the consolidated fund? Consolidated fund. How much is it?
120.
20.
What do you say? 120, Labi.
120,000.
You have surplus. How much is the surplus? What is the surplus we have? 100,000. Is it clear? This will give us what? Closing balance for this. If we add the two together, you have closing balance, which is going to be 220. If we use what the opening balance here, initially, that opening balance, if we put it here, 120. Are you with me? If we put the opening balance here, now, can you see what we have is 220 now? If this is the way I've done it. Hello? Do you understand what I'm doing here? Then
Yes,
I will
sir.
not say surplus. I will just call it what? Closing balance. Here, I will put what? Opening balance. But if I don't do it this way, if I follow the former procedure I followed, then I will now come here and add it together like this. I will have my 220. Is that clear? This is your closing balance. Then you will also now put development fund. How much is development fund? How much is our development fund? 120. we put the development fund here. Which one do we also have again? You also have deposit. This is the total fund. We now come here and put what? Other liabilities. What is other liability we have? We have deposit. How much is our deposit? Deposit is how much, please?
60,000.
60,000. When we add it together with what we have, what do we now have?
400.
400,000.
400,000. Does it balance?
Yes.
This is what? Funds, total funds, and liability. Any question? Any question? Hello? Any question, please? Please ask now. Any question?
No,
Well,
sir.
after, okay. What's the next question they ask you to present? Next question.
Theory. State the components of debt.
Points.
Yes.
Now, if you listen to what I've explained to you earlier on, I said statement of financial position in the public sector has the following components. We have what? Statement of comprehensive income, which can either be considered revenue fund or income and expenditure what statement. We also have statement of financial position. We have statement of cash flow statement. We have statement of net assets. Then we have what? Statement of accounting policy. We also have statement of notes to the account. Those are the 6 components of what? Financial statement in the public sector. What's the next question?
Sir, sorry to cut you short.
What's the next question?
I don't know if that I don't know if there was an error in their solution. For their statement of asset and liability, they got 480,000.
480,000. 30.
480. Total liability, 480. Total investment and other cash assets, 480,000.
480. Why do you see the 80? What is their statement of, what is their considered revenue fund balance?
220,000.
220.
Yes, sir.
And that 220 is the same thing with what? That is I told you, if you want to follow that procedure, you will not have surplus. That 220 is what we have here, 220 here. Look at it, 220. When you have surplus with the opening, you have your 220. What is their development fund account?
140,000. 140,000. 140.
140. Where did they get the 40,000 from?
Grant of 100,000, then transfer from consolidated revenue from 40,000. That's all. Those are the two items that they recorded.
Don't we have 40,000 in our fund account, in our development fund account? Look at it now, 40,000 plus this. The total is 20, what do you call it? Local government what? Loan from the local government, federal government. That's 200,000 loan to the local government, 80,000. Where do they now get what they have done for?
I'm only trying to get clarification in case. I'm just trying to get clarification. You know, sometimes maybe there is an error. I don't know. So that's
I'm
why
not
I'm just
using their solution. A lot of, even if you read the burden of the solution, they will tell you should not depend on their solution. What I gave to you, does it balance or does not balance?
Thank you, sir.
It balance.
I'm not using their solution. I have what it takes on my head to put you through. That's why I'm giving to you. I'm not after their solution. What I need to do, I will do it and tell you what's supposed to be the solution. That is it. They've committed error in the process of preparing their own accounts. Any other question? The last question there says what? What do they say you should do?
State for principal users
State for
of government
principal users.
and their
Now,
needs.
who are the four principal users of what? Public sector accounting information. We have the executive arms of government. We have the legislative arms of government. They are meant to use. We have what we call the public at large, making what? Two. Then we have what we call what? Foreigners, making four. We have the internal users and external users. Under the internal users, we have the what? The executive. The head of executive, Mr. President, will use it. The cabinet of Mr. President will use it, which said to be the ministers. The accountant general is meant to use that. We have the what? The civil servants are meant to use what? Information, accounting information in the public sector. While under the external, we have what we call the legislative. Under the legislative, we have the National Assembly, we have the House of Rep. They are meant to use that. We have the Auditor General, is meant to use that. We have the foreigners. We have international organizations. All these are those who are meant to use the information. Any other question?
Okay, sorry. Thank you, sir. So for this number C question now, we are allowed to mention the internal and external users of public sector accounting, right?
Yes. Since they ask you to list four, you will list two from the internal, list two from the external.
Thank you, sir.
You're welcome. Any other question? Now, I'm done with source of government revenue. The next topic we are meant to look at now. Okay. Now, I sent some notes to you today. I don't know whether you follow up or not.
Yes, we have the notes.
You have the notes. Now,
yes.
Looking at it, looking at that note, excuse me, I'm coming. Now, the one I'm looking at today now warrant, revenue control, expenditure control. That's the next line of action we are meant to look at. What do we mean by warrant in the public sector? It is not a warrant letter. Warrant is a document of authorization for government to incur expenditure. Warrant is document of authorization for government to incur expenditure in the public sector. It is one of the power given to the Minister of Finance to control expenditure. Warrant is a document of authorization for Accountant General to incur or to make payment for any public expenditure. Any question from there? You are not saying anything. Please, who and who are there, please?
We are here.
We are all
Okay.
here.
Now, looking at it, let's look at what the... Okay. Let me relate with you on the platform. I've opened the... Now, this is it. Let's look at what authorization of government expenditure, control of government revenue, and fund account. Now, authorization of government expenditure. Government must be properly authorized and approve its expenditure. The authorization which conferred power on the officer controlling expenditure or a vote to incur expenditure is called warrant. Now, warrant is simply means document of authorization for public expenditure to be incurred. Simple. Expenditure is categorically classified into two. We have recurrent expenditure and we have capital expenditure. And this so-called warrant is also in support of these two expenditures, that we have what we call recurrent expenditure warrant and we have what we call capital expenditure warrant. Under the recurrent expenditure warrant, we have 7 types of warrants. We have what we call annual general. Annual general warrants of recurrent expenditure. We have what we call provisional general warrant, we have what we call supplementary warrant, and we have what we call reserve expenditure warrant. We have supplementary contingency warrant, we have supplementary statutory expenditure warrant, and we have virement warrant. All these are warrants that are meant to be used by the government to incur expenditure. And the way we now have it under the recurrent expenditure, we also have it like that under the capital expenditure. Now, for annual general warrant, it's the warrant to be released by the Minister of Finance to the Accountant General in order to pay for what we call personal emolument and other related expenditure. Let's see what the warrant is talking about. They said, annual general warrant of recurrent expenditure. This authorizes the Accountant General of the Federation to release funds for the payment of personal emolument and other services provided for the approved estimate or budget. Simply means, when we say personal emolument, it means salary of the employees. That is the warrant that are meant to be released by the Minister of Finance to the Accountant General for the payment of the personal emolument and other related services, as it is appeared in the budget estimate. However, the Minister of Finance may exclude from the annual general warrant any item or expenditure on which he desires to exercise special control. If we notice that some of these particular items might not go now, he can remove some and allow the other ones to go. Is allowed. Constitution gave the right to that particular Minister of Finance to do that. The original copy of the warrant is meant to be addressed to the Accountant General, while the duplicated copy will be addressed to the what? Auditor General. Any question on that part? Now, apart from the annual general warrant, we also have what we call provisional general warrant. Provisional general warrant is warrant to be released when the budget or appropriation has not been approved by the National Assembly. This particular warrant will be in operation for the maximum of 6 months, while it's meant to be used in use for minimum of 4 months. Now, this particular warrant is meant to be released when budget has not been approved. And on that note, you are meant to have a better understanding that this can only be in operation for maximum of 6 months, minimum of 4 months. And the amount you are going to spend must not exceed the last budget or the last budget estimate. Now, let's read what the book is saying about what we call provisional general warrant. This is issued at the beginning of the financial year before the Appropriation Act comes into operation. That is, before they will release the Appropriation Act or the budget. It provides for the continuation of service of government on a scale not exceeding the level of this service in the previous financial year. The warrant will be in operation for a maximum period of 6 months or until the Appropriation Act come into act. That is when they effect that when the budget has been effected. It can only be in operation whichever shorter the amount expended under the provisional general warrant must not more than the sum expended during the same period in the previous year. Any question as regards to this? The same way they address the first one, that's the same way they will address this particular one. The original copy will be addressed to the Accountant General, while the duplicated copy will be addressed to the Auditor General. The next one is what we call supplementary general warrants. Supplementary general warrants. This warrant is issued for additional personnel emoluments and other related services for the approval of supplementary budget or supplementary estimate. Government meant to put in place what we call supplementary budget. Because there's a supplementary budget, there will also be supplementary items that the Minister of Finance is also meant to release warrant for Accountant General to carry on the such expenditure, to be able to pay for such expenditure. On that note, the warrant that they call supplementary general warrant is meant to take care of what we call additional personal emoluments and other related services. That is the purpose of the supplementary general warrant. We also have what we call reserve warrant. That reserve warrant is also meant to be used by the Minister of Finance based on the power used to exclude some items in the previous estimate. As a result of that, for Minister of Finance to be able to take care of those items that has been excluded, is meant to release what we call reserve expenditure warrant. Let's look at what the book is saying. This authorizes the release of the fund, including in the approved annual or supplementary estimate, but excluded from the annual general warrant or supplementary general warrant. It is the release of the fund which the Minister of Finance has initially withdrawn in order to exercise special control. He used his own control to reduce what? Those things initially. Is now meant to release what we call reserve expenditure warrant. The next one is contingency warrant. The contingency warrant is meant to be used, is meant to be released when there are that cannot be delayed, unforeseen circumstances that cannot be delayed. That is when they will release supplementary contingency warrant. Let's look at what the book is saying. This is issued in additional case where virement is not possible. What they are telling you here is that virement and supplementary what? Contingency warrant play the same function. Where there is no contingency, where there is no virement, they will use contingency. Application of the additional provision reserve reveal such high degree of urgency that the issue of the fund cannot be postponed until supplementary appropriation act is passed. Contingency fund warrants must be issued by the Minister of Finance, authorizing the Accountant General to transfer necessary funds from the contingency fund account to the consolidated revenue fund account. Thereafter, supplementary contingency warrant must be issued authorizing the expenditure from the head or sub-head concerned. What we are saying here is that the contingency warrant is only meant to be released only when the situation cannot be delayed. And when you are using contingent supplementary warrant, you can't use virement because supplementary and virement are meant to play the same role. Now, what does the supplementary virement warrant serve? This is issued when a result of unforeseen circumstances, you can see that they serve the same purpose, during the time and the annual estimate were being approved. An additional provision is also required under the particular subhead, and equivalent amount can be saved under the another subhead. Simply means you can transfer money from one particular head to another head, but you must not make a particular head to be deficit while the other will be what? Surplus. Now, they now say to be successful, application for virement should be in writing. You need to apply for virement when you want to use virement. Be in writing. State the particular head in its deficit. State another particular head in surplus. You need to state that, indicating the both subhead are being in the same economic head. They must be under the same head where you are transferring money from. State after the transfer the other subhead which will be what? Deficit. State the virement warrant not sought to create another subhead. You are not using virement to create another subhead, but you can transfer money from a particular head to another head, and you must state the condition. They must be under the same economic condition that you are transferring money from. On the last note, we also have what we call supplementary statutory expenditure warrants. Now, this one, what does it serve for? This authorizes the additional expenditure over and above included in the annual general warrant. This one, you are meant to use it when you look at your supplementary general warrant from the both and charges, consolidated revenue fund, and other related. You are now think that you also need to raise additional money based on the annual general warrant and supplementary being released. You are also meant to release what we call supplementary statutory expenditure warrant based on the additional estimate put in place by the government. The same thing we have done under that, it will also have it under the capital expenditure like that. But this one, the one I explained, is under what? Recurrent expenditure, while the capital is basically meant for capital project, but on the same purpose. Any question? Any question? I might not solve this question today. We'll solve it next class. We also have what we call revenue control. Revenue control.
He's doing advert. You know the advert.
The term revenue control describes various checks put in place to ensure that all money due are received and accounted for. That is the control you are meant to put in place. What are the following elements that are meant to be put in place when it comes to revenue control? We have what we call periodic monitoring. We have what we call policing the revenue administration system that serve as not rendered without any charges. What we're saying is this: you are meant to what to follow the policy of that particular what revenue administration to the latter. Timely issuance of the demand notice where they did not pay up and tracking of debt needs to put in place. Timely issuance of revenue documents where necessary. Prompt lodgement of account, putting in place what we call cash limit or revenue limit to be handled, and also functional system of internal control and accounting system. All these are the following control that are meant to be put in place. We also have what we call fund. Fund refers to as what? The fundamental principle underlining the government account for stewardship purposes, where the government are meant to create separate accounts for different funds. Now, we have classes of funds. We have what we call government fund, we have what we call preparatory fund, and we have what we call fiduciary fund. Now, government fund, this one has to do with what? Related what? Tax. Government fund relates to tax and other what? And fund power of the government. Now, the purpose, the main source of government revenue is taxation. That is why we said government fund is referred to as what? General tax. When we talk of preparatory fund, that one has to do with what? The fund generated by the government through the business or put in place by the government for the business purpose or parastatals or what agency. They said these are funds used to account for the sources derived from the business activities of the government. That is why they call it what? Preparatory what? Fund. Then the last one is what? Fiduciary fund. That fiduciary fund is nothing but what? The custodian fund, the money being owed on to by the government, being transferred from another government or a particular government to keep. That is why they call it what? Intergovernmental fund. These are used to account for the resources held and managed by the government in capacity of a custodian. Now, what are the types of funds we have? We have different types of funds. It's different from the classes of funds. Under the type of fund, we have what we call general fund, we have capital project fund, we have special fund, we have trustee fund, we have contingency fund, intergovernmental service fund, we have what we call revolving fund, we have self-liquidating fund. All these are the various types of funds we also have. Then we also have what we call government expenditure control. Now, we have various controls to be put in place by the government in order to control the public expenditure. Under this, we have what we call executive control, we have legislative control, Minister of Finance control, we have the Treasury control, that is the Accountant General's control. We have departmental control, using of vote book for departmental. We have what? Office of the Auditor General's control. All these are the various controls to be put in place by the government. Under the executive control starts from the what? The president and his cabinet. The various control put in place by the president and his cabinet in order to monitor the public expenditure. Those are the ones we refer to as what? Executive control. In terms of budget preparation and presentation of the budget to the National Assembly. Let's look at what the control is talking about. It's very elucidating. Now, they said the executive comprises of the president and his cabinet member who have the responsibility for the efficient and effective control of the administration of the country. The politically and economically, The Constitution created two other arms of government called the legislative and judiciary for the purpose of check and balancing. All measures and policy taken by the president are subject to the approval of the legislature within the what habit of the Constitution. Simply means president cannot do anything without seeking for the approval from the Senate. Now, look at it. President, in order to satisfy the provision of the Constitution, also appoint a cabinet committee on estimate to advise him on the contemplated policy, measures, and the policy. And the policy measures the contemplated and the transmits the budget department in the presidency. What we're saying is this, in a simple analysis, if you look at it in the public sector, government, president is meant to create ministry. One of the ministry is duty. One of the in the ministry, there's a particular ministry that is responsible for planning and budget preparation. Planning and budget preparation committee, national planning. Now, that ministry is meant to prepare the budget and present to the government, present to the president, to be presented to the National Assembly for scrutiny and approval for national planning and development to take place. That is the role to be played by the executive. Then the legislative control, that is the control to be carried out by the National Assembly. Under this particular control, we have what we call postnatal and what we call antenatal. The antenatal is the control put in place before the approval of the budget, while postnatal is what is being put in place after the approval of the budget. Aside that, we have what we call the Auditor General's control. The Auditor General's control is also meant to scrutinize all accounts and records of the money collected and spent based on the reports being given to the National Assembly by the Accountant General of the Federation. Minister of Finance is own control based on what? The use of warrants. The only power given to the Minister of Finance is the warrant to be used. And he has the power on financial regulations. He has the power to regulate the Financial Regulations Act. Now let's read what the Minister of Control is relating to. He said, when ministries and departments require money to pay for service, they are normally applied to the Minister of Finance such fund. The tradition is that once in a year, ministers and parastatals present estimates to cover all their needs and requirements, which are expected to be prudent, necessary, and reasonably in accordance with the Financial Regulation Act. Now, if you go further, they say appropriation as the minister pass the consolidated revenue fund and the expenditure estimate to the president, who will present them to the Federal Executive Council before they are furthered to the National Assembly as appropriation bill. When they now pass it into law, it becomes Appropriation Act. Now, control by warrant, that is the control to be releasing the warrant authorizes the Accountant General to release funds from the consolidated revenue fund or development fund. The system of warrants gives the executive greater control over the issuance of funds than will be offered by the system, which release solemnly on the provision of the Appropriation Act. Simply means it go in line with what? With the Constitution. The warrant, if they did not release warrant for the Accountant General Accountant General cannot incur any expenditure. And when we talk of what treasury control, Accountant General is also meant to put in place the necessary control in terms of bookkeeping, in terms of internal control, and in terms of what accounting system to make sure the system is balanced, which all the to follow based on the description given by the Accountant General in terms of internal control and the accounting system. Then all ministries are also meant to put in place what internal audits, which they are there to look at what to appraise the activities of all departments in the ministry. This is another aspect of control exercise in any organization. The treasury detached internal auditor to the ministry and self-accounting department to appraise the effectiveness of the existence of internal check. They are meant to appraise the activity, the internal control of each ministry. That is the purpose of what internal audits. Then departmental control. That one has to do with what the use of vote book by all the ministries to monitor the public expenditure. These are the various controls to be put in place, and the use of voucher. Voucher is looking at it from another angle, is another topic, but we cannot waste the whole day on this one because it's just only what a 2 pages. What is voucher? Is a document of evidence for receipt or payment of money. Document of evidence for receipt or payment of money. We have 3 types of voucher: payment voucher, receipt voucher, and adjustment voucher. Payment voucher is used when payment is going out. There is payment voucher. When the revenue is meant to be released, is meant to be received, they use what we call receipt voucher. And the last one is what adjustment voucher. That's what is being used when there's an adjustment or there is an error to be corrected, or they want to transfer funds from one department to another department. That is when they use that. What is the good quality of a good voucher? These are the quality of a good voucher. We have the voucher must have a date, must have a classification code, the amount in word and figure, the number of the voucher number, the description of the payment, the name and the address of the payee and the benefit, the authorization person, the approval person, the signature of the cashier. All this must be there. And there are rules guiding the what? The usual of what? Voucher, payment voucher. The voucher must be satisfied for payment by the officer who is authorizing to do so. The voucher must be stamped, checked, and passed before you can raise it out. The voucher must be what? Must also be stamped based on the book record. All these are the aspects of voucher in terms of the adjustment and other related that you can also go through. The calculation part under the custodian, and we work on it next class before we can now look into what we call cash office and cash management. We are almost 6 minutes to level. You can take your time to go through this. Let me review it for now. We have exceeded the time already. I know that. Any other questions? Hello? Hello?
Hi.
Yeah, hello, sir.
Yes.
Sir.
You can also take your time to go through this. I will come back next week to solve the calculation. There's one calculation under this part where government is meant to act as a custodian. I will solve the question there. Then we can now move to the next level. Thank you very much for being part of today's class. Please manage to read the notes, manage to go through the solutions. It will help you a lot. You can have a better understanding. You don't need to be looking for me when you are in the hall writing your exam. Thank you very much.